Hey everyone, welcome back. Today we're going to unpack a pretty dramatic financial story where the chaos on Wall Street collides head-on with the wild world of crypto. And we're going to see how a massive market tremor can shake even the smallest of assets.
And honestly, that just hits the nail on the head, doesn't it? This one quote from our source material perfectly captures that high-stakes, anxious mood gripping investors, and it really sets the stage for everything that follows.
And yeah, that's a great question, right? Because here's the thing. When you understand how these huge, massive economic forces can ripple all the way down to a tiny, niche asset, well, that tells you so much about just how interconnected modern finance really is. That's where the real story is.
Okay, so let's start with the big picture here. We're talking a brutal, gut punch of a sell-off on Wall Street. This wasn't just some minor dip. This was full-on panic mode, the kind that sets off alarm bells everywhere. So the first domino to fall, that was the tech-heavy NASDAQ, dropping a steep 1.7%. And all of a sudden, all that hype around AI and big tech, it started to feel less like a sure thing and way more like a bubble that's, well, losing air. And look, this wasn't just a tech problem. The S&P 500, which is a much broader measure of the market, it shed 1.2%. And that tells you the fear was really spreading, right? It was hitting companies across all sorts of different industries. And then, to round it all out, the Dow dropped nearly a full percent, losing over 430 points. I mean, when you see all three major indexes bleeding red like this, you just know investors are running for the exits.
So what caused all this? Well, it wasn't just one thing. It was a total perfect storm. You had CEOs basically shouting from the rooftops that stock prices were way too high. You had major companies like Palantir getting absolutely hammered. And even Bitcoin, the king of crypto, started losing its footing. And then you add in all that lingering anxiety from a recent government shutdown and inflation that just won't quit. And bam, you've got a potent cocktail of fear.
Okay, so let's pivot from that massive storm on Wall Street to the tiny subject at the heart of our question, a small DeFi token called PZEN, or PZEN for short. And it found itself, you guessed it, directly in the path of this financial hurricane. So what exactly is PZEN? Well, in the simplest terms, it's a crypto token that's built for one main reason: to automatically grow your holdings. It's all about generating rewards and then putting them right back into your principal, all without you having to lock up your funds. It's kind of the ultimate earn-while-you-sleep deal in the DeFi world. But, like any crypto asset, it's a total double-edged sword. So on the one hand, you've got that super powerful auto-compounding feature and the flexibility of no lockups. But on the other hand, you're dealing with crazy price swings, a really small market, and yeah, the kind of drama that can just pop up in any of these niche crypto ecosystems. All right, so this is the big question. How does the panic on Wall Street end up directly hitting the price of a tiny token like PZEN? Let's really break down that chain reaction. Okay, to really get this, we're going to walk through a 4-step analysis. We'll start with how crypto often gets tied to stocks, then we'll look at the wider economy, zoom in to its own specific ecosystem, and then finally we'll run the numbers. So step 1 is what we're calling the correlation trap. Here's how it works. When investors get spooked and start selling off risk assets like tech stocks, that fear often spills right over into crypto. So Bitcoin drops, and then smaller, more speculative altcoins like PZEN, they can fall even harder. It's like an amplifier. Okay, step 2, the broader economic ripples. When people are worried about things like inflation or government instability, they just have less spare cash to throw into speculative plays. And that pulls a ton of buying pressure away from these niche assets. And number 3, you've got factors that are specific to Pulse Chain itself. See, PZEN's fate is totally tied to its home network. So when the whole market is down, that negative feeling can hit a smaller ecosystem even harder, just cranking up the volatility. Okay, now let's see how this plays out with some actual numbers. This hypothetical scenario from our source really shows that cause and effect chain in action. So if the NASDAQ falls just another percent, it could easily drag Bitcoin down to test that key psychological level. Now, for a small token like PZEN, because of that correlation in ecosystem risk we just talked about, that could mean a much bigger amplified drop of like 15%. But here's the flip side. If the markets stabilize, its unique features could actually attract buyers who are looking for a rebound, which could lead to some pretty significant upside. So let's put this all together. What's the big takeaway here? Is this whole market crash just a temporary storm for a token like PZEN? Or does it tell us something deeper about where it might fit in a portfolio?
Well, in the short term, it's pretty clearly a major headwind. I mean, as long as fear is the main emotion driving the market, super speculative assets like PZEN are just going to face a ton of choppy waters and downward pressure.
But, and this is the interesting long-term twist, the very things that make PZEN what it is, its decentralized nature, that automated yield, those things could actually become way more attractive in a world where traditional finance feels unstable. You can think of it as DeFi purity. It operates completely outside the mainstream system. So for investors who are getting tired of that system's problems, it could actually become a pretty compelling alternative, a real hedge. And all of this leaves us with a really fascinating question to think about. In a world where trust in our traditional financial systems is constantly being tested, could the very thing that makes a token seem risky, its total independence from that system, could that actually end up being its greatest strength? Something to think about. Thanks for watching.